Good morning students. Today we are going to start cash flow statement. Cash flow statement is divided into three parts: cash flow from operating, cash flow from investing and cash flow from financing. First activity is your cash flow from operating, second activity is cash flow from investing and third is cash flow from financing. First of all, you have to calculate profit before tax. Profit for the year and provision for tax. Proposed dividend and transfer to any reserve. It may be general reserve, capital reserve or security premium. And if deferred tax assets decreased, then it will be added. Deferred tax liabilities increased, it will be added. Less deferred tax assets increased and deferred tax liabilities decreased. It is profit before tax. And non-fund items like depreciation, finance cost, means interest on debentures or interest on any loan. Preliminary expenses or any other expenses write-off. Goodwill written off, loss on sale of any asset, less non-trading items, profit on sale of any asset, dividend received, interest received. This is operating profit before change in working capital. Before change in working capital, add increase in current liabilities or decrease in current assets, less increase in current assets the total of all these items is plus, then this is cash flow from operating. If this is minus, then cash used in operating. Second activity is cash flow from investing. Sale of any asset at purchases of any assets less dividend received add interest received add goodwill purchased less. If plus, then cash flow from investing. If minus, cash used in investing. Third activity is cash flow from financing. Issue of shares and issue of debentures. Issue of shares and issue of debenture plus redemption of shares or debentures. Redemption means minus interest paid dividend paid, payment of bank overdraft, plus cash flow from financing minus cash flow from cash used in financing. Now add all these items. For example, cash flow from operating 1,40,000, cash used 40,000, cash flow 80,000. For example, cash flow from operating 1 lakh and cash and cash equivalent closing 240. Closing minus opening is equal to cash flow from all activities. It must be 1,40,000. Now add these items in working notes. 140 plus 80,000 minus 40,000. Plus minus, this is your answer. If the answers match, cash flow from operating, investing and financing is the same as cash and cash equivalent, then your pro forma is correct, otherwise your question is wrong. In our next lecture, we will do the practicals of cash flow statement. Thank you.